If you're looking for an investment landscape that blends just staggering natural beauty with some of the highest projected rental yields in Southeast Asia, then you really need to stop thinking of Phuket as just a vacation spot. Today, we are taking a deep dive into the island's transformation, focusing on the luxury property market and the momentum that's building for 2025.
And this deep dive is really designed as a shortcut for you. We're distilling insights on location, ownership, and investment potential straight from Ocean Worldwide. They're a luxury real estate agency that's been on the ground in Phuket since 2004. So these sources, they're grounded in 2 decades of helping investors succeed there.
That deep history really matters, doesn't it? We're working with expertise synthesized by their director, Sandra O'Neill, who has, guided thousands of families and investors through the nuances of this market. Our mission is to pull the most important nuggets from their data to show you exactly where the stable, smart money is moving, especially in that luxury condo space.
Exactly. And the most important piece of context here is the hook. 2025 is not a speculative boom. It's not a bubble. This is the start of a period of, well, steady, solid growth. The market is being driven by a fundamental structural change in who is deciding to call Phuket home.
Okay, let's unpack that momentum a bit. We all know tourism is the core engine, but what's the hard data that suggests this is truly sustainable, not just, a post-pandemic bounce?
The sustainability, it lies in the enduring, just relentless demand for high-quality holiday lets. We've seen tourism rebound globally, sure, but Phuket's specific infrastructure and brand make it a perpetual draw. Ocean Worldwide's projections for key high-season areas, they really illustrate this.
Give us the numbers. Where is that demand most acute?
In the Central West hubs, the data is very strong. We're looking at Cheng which is a really dynamic area, projecting massive high-season occupancy rates of between 80 and 85%.
80 to 85, wow.
Yeah. And right next door, Bang Tao, it's anticipated to sit comfortably at 75 to 80%. That kind of consistency, it basically guarantees cash flow and provides the bedrock for a strong capital growth environment.
That seems like an amazing outcome for property owners, but, if those numbers hold, doesn't the market risk becoming oversaturated with short-term rentals, maybe driving prices down?
That's a fair challenge, and that is precisely where this buyer shift comes into play. If this market were still dominated by, 2-week holiday makers, yes, saturation would absolutely be a risk. But the profile of the buyer has just profoundly changed over the last 5 years.
Who are we talking about now?
We're talking about a much more diverse group.
Yeah.
You have wealthy families looking for an international education for their kids. You've got tech professionals who are now permanent remote workers, and retirees seeking better health care and a lower cost of living. But they want it coupled with a luxury tropical lifestyle. They aren't looking for a 2-week rental. They're looking for properties that facilitate longer stays, like 6 months to a year, or even permanent residency.
Right. That changes the entire calculation, doesn't it? It means the demand is shifting from that cyclical high-season cash flow to something more stable year-round.
Exactly. And this shift demands a different kind of property, one that offers sophisticated amenities, better digital connectivity, and access to services. It requires the island to be more than just beaches.
And that ties directly into the infrastructure upgrades that Ocean Worldwide highlights. We're not talking about minor cosmetic fixes here.
No, not at all. We're talking about a transformation. The Thai government has invested heavily in transportation-upgraded highways, road widening projects, the airport expansion. But crucially, it's the growth of new retail and lifestyle hubs, like those massive central group developments. It means you can now find international schools, gourmet grocery stores, world-class medical facilities, all within easy reach.
That sounds like the key differentiator, because if you're a remote worker or a young family, you can't make that move unless the island can sustain a high quality of life beyond just the beach view.
It's the critical underpinning. These enhancements are transforming Phuket from a purely scenic tourist spot into a truly self-sufficient residential hub. And when an area achieves that residential stability, its property values are supported by both rental income and long-term resident capital. It's a much stronger foundation for appreciation.
So we have a robust, sustained market. Now, for the critical decision, location, 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 if you're looking to purchase, where does Sandra O'Neill's team suggest the smart money is heading?
The consensus is that the island provides a few distinct investment profiles. And, the right choice really depends on your personal balance of lifestyle versus your priority on rental yield.
Let's start with Cheng, which you called the investment darling. What's the real vibe there?
Cheng is where the action is, but a very high-end version of it. It's bustling, vibrant, dense with luxury developments, but it still has a sophisticated feel. It's where you find those lifestyle staples like Boat Avenue and Porte de Phuket, which are just full of high-end restaurants, boutiques, and social spots.
So if I want a property that I can enjoy in a lively, modern atmosphere, Charing Talay is the place. But does the capital growth potential match that atmosphere?
Oh, absolutely. It's a really solid choice for capital appreciation because it's so central, and it appeals equally to affluent holidaymakers who want convenience and that growing resident population. It's like the definition of a well-located, accessible property.
Okay, next up, Bangtao. This is the traditional luxury heartland, right? Right next to the famed Laguna Phuket complex. Why is this area considered the rental powerhouse?
Bangtao just commands a premium. The area is defined by its pristine beaches and that concentration of five-star resorts and exclusive communities. That's what drives the high daily rental rates. Because the inventory is so high quality and the demand from affluent tourists is constant, this is where we see the highest potential yields.
And when you say high potential, you're not talking about 4 or 5%, are you?
No. This is where the numbers get really exciting for investors. Some reports, and our sources confirm this, indicate that in prime, managed properties around the Bangtao area, annual rental yields can consistently exceed 10%.
Exceed 10%.
Yep. If your primary objective is consistent, high rental income, Bangtao is where you focus your search.
That level of return is highly competitive globally. But let's move to Kamala, which is sometimes overlooked but you say is rapidly gaining traction. What's its appeal?
Kamala is the counterpoint. It's more low-key currently, and it appeals specifically to the long-term residents, the families and retirees seeking peace and quiet. You sacrifice some of that immediate commercial buzz of Charing Talay for a quieter, more genuinely tropical atmosphere.
And the prices there? More accessible?
Entry prices can be more accessible than in the prime Bantao corridor, yes. But crucially, Kamala is known for offering really high-quality options, including modern tropical pool villas, often situated on Chenot-titled land plots.
Now hold on, you just threw out a key legal term there, chenote. For our listeners who might be new to Thai property investment, what is a Chenot title and why does it matter so much?
That's a vital distinction to make. In Thailand, land titles vary. A Chenot is the highest and most secure form of land title available. It's essentially a state-guaranteed, demarcated title deed, complete with GPS coordinates. For any investor, but especially a foreign one, finding a property with a Chenot title provides the maximum possible security and clarity on ownership boundaries. That's why it's so highly desirable.
Understanding the location is step one. Step two is understanding the asset. With the explosion of new developments, let's focus on those upcoming luxury condos. Beyond the marketing images of, waking up to the waves, what's the specific investment math on a coastal condo?
The math is often very compelling, mainly due to that high land scarcity we mentioned. Let's use a specific example provided by the Ocean Worldwide team.
Okay, lay it out for us.
Okay. Consider a brand new one-bedroom beachfront condo valued at around, say, 5.2 million Thai baht. Given the strong rental market, that specific property could easily command 40,000 baht per month in rental income.
Well, let's see. Run that calculation. That puts the gross annual yield at over 9.2%. That is a powerful return. It places it well above the average returns we're seeing in comparable markets like Bali or Vietnam.
Exactly. It just showcases the premium that Phuket's established tourism infrastructure allows owners to charge. And that moves us to the mechanics of ownership, which is absolutely vital. For foreign investors, condominiums offer the most straightforward route: freehold ownership.
Freehold is the dream, right? Meaning outright ownership of the unit, registered under the Thai Condominium Act. But there's a critical restriction that creates a sense of urgency in new developments.
That restriction is the 49% foreign quota limit. By law, only 49% of a condominium's total saleable area can be sold to non-Thai citizens under a freehold title. Once that quota is exhausted, any remaining units have to be sold under a different structure, usually leasehold.
So if you wait too long on a highly desirable new project, you might literally miss out on the possibility of freehold ownership altogether.
Precisely. That quota dynamic is why proactive early action is so essential when you're looking at new luxury condo launches. Now, conversely, if your heart is set on a villa, the ownership structure is often different.
How does that villa ownership work for a non-Thai buyer?
Foreign ownership of villas, it typically involves a leasehold structure. This is generally set up as a 30-year lease agreement with options written to the contracts for 2 subsequent renewals of 30 years each. This creates a potential long-term term of up to 90 years. We call it the 30 plus 30 plus 30 structure.
And while that's legal and very common, it's not the same as outright ownership of the land. And this brings us to the absolutely non-negotiable step that Sandra O'Neill and her team stress constantly: professional legal guidance.
It is truly vital. You cannot try to navigate the nuances of Thai property law on your own. A local professional lawyer is essential for due diligence checking that Chinno land title, ensuring the development has all its permits, and confirming the ownership structure is sound.
And they also help clarify technical terms that could trip up an overseas investor, like the difference between a registered condo and a standard apartment building. Why does that specific distinction matter?
It matters for long-term security. When you buy into a registered condominium project under the Act, your freehold title includes a defined, shared right in the common areas, including the land itself. If you just buy a unit in a standard apartment building, you might only own the unit itself, with far less security or legal recourse over the building or the land. It's a technical point, but it's key to achieving true peace of mind.
That clarity on the legal landscape helps us frame the strategic decision point for 2025: condo versus villa. Let's compare the fundamental trade-offs for the listener.
The choice really boils down to a balance between ownership simplicity and the potential for premium returns. Condos are simple. They're often freehold, have lower entry prices, high accessibility for all types of renters, and much lower maintenance demands. Projected yields generally sit between 5 and 7%, very consistently.
And then you have the villas.
Villas offer space, privacy, and true luxury, which allows you to charge premium daily or weekly rates. This pushes the potential for those premium returns, often starting at 8% and climbing higher in exclusive locations. The trade-off is the ownership complexity, that 30 plus 30 leasehold structure, and naturally higher maintenance costs.
It seems like a clear risk-reward assessment. But developers are trying to mitigate that risk for investors now, aren't they? With these income security features that are becoming more common.
Yes, the market is maturing, and these guaranteed rental schemes are a huge draw for new foreign investors. A developer might promise a fixed return, say 5 to 7%, for the first 3 to 5 years. It takes the operational risk off you as the buyer and ensures immediate cash flow.
That's good for income, but what about protecting the initial capital investment? That's where the most compelling security feature comes in: the buyback option.
This is a powerful safety net, and it reflects the developer's high confidence in their own product's long-term appreciation. A buyback agreement is where the developer contractually agrees to repurchase the property from you after a set period, maybe 5 or 10 years. And they do it often at the original purchase price, plus a guaranteed capital appreciation, maybe 10 to 15%.
So it essentially mitigates market risk. It guarantees you an exit strategy with a built-in minimum profit.
Precisely. It allows you to invest with confidence, knowing that if market factors change dramatically, you have a pre-agreed floor in your investment. It's a mechanism designed specifically to attract and secure that high-value foreign capital.
We've covered everything driving the market up: tourism, infrastructure, shifting buyer demographics, these security features. But the fundamental constraint remains: scarcity.
Scarcity is the silent, ongoing driver of appreciation. Phuket is an island. It's a finite landmass. The supply of high-quality inventory, especially prime coastal land suitable for development, is rapidly dwindling. Sandra O'Neill's team consistently emphasizes this, that limited supply means desirable, well-located properties will continue to appreciate regardless of minor market fluctuations. This makes strategic timing essential for the savvy buyer who wants to secure an asset now before the last prime spots are taken.
So to quickly summarize the key takeaways from this deep dive, the market is underpinned by strong infrastructure growth. We're seeing the highest potential yields in these rental power hubs like Bangtao, and the ownership landscape is clear straight. Freehold is available for condos, but limited by that 49% quota, while villas rely on the 30 plus 30 plus 30 leasehold structure.
And I think the most profound change is the cultural one. Phuket is shifting towards becoming a fully fledged, stable residential hub. It's attracting long-term residents and families alongside the tourists. This fundamentally changes how you should calculate investment value.
So we'll leave you with this provocative final thought. If the inventory of quality coastal assets is running out and the year-round resident base is getting exponentially more stable, how do you factor the true long-term value of that increasing scarcity into your current portfolio decisions?
If you're serious about exploring this highly dynamic market and you need guidance on which opportunities offer the best balance of yield and security, we really encourage you to visit oceanwwp.com. You can find the latest listings and expert advice directly from the team who provided all these insights, helping you navigate your next property move in Phuket.
Thanks for diving deep with us. We'll see you next time.